Thailand announced that they're going to implement a negative income tax in 2027. That would make Thailand the first country in the world to guarantee a basic income. Okay, so universal basic income provides money to everyone, and then it's paired with some kind of tax reform. And negative income tax has a phase out mechanism. So, like in this case, let's use Thailand numbers. And so these aren't for sure, but this will help explain this. So, they're talking about setting the threshold at 60,000 baht is their dollars. 60,000 baht is basically about the 50th percentile. So if you have $0 in income, so if you file your taxes and you report $0 in income and the threshold is 60,000 and the phase out, the tax rate is 50%, then you would receive 50% of the difference between 0 and 60,000. So that would be 30,000 baht that you would get. And then if your income were 20,000, then the difference between the 20,000 and 60,000 is 40,000. And so then you would get 20,000. So everyone below that threshold is boosted according to what their income is. And they're always better off earning an additional dollar because they're always going to keep half of that additional dollar. So unlike with a traditional minimum income guarantee, which is kind of common around the world, where they would essentially just lift you up to a line and you're not actually better off because you're losing essentially 100% of your earnings. It doesn't make any sense. But then with a negative income tax, you actually do maintain that incentive to work. And the difference, like, it's good that they'll essentially be boosting the bottom 40%. 8,000 threshold, that's fine. Depending on what the amount is and what the rate ends up being, it looks like they could actually eliminate up to like 90% of their poverty in Thailand, depending on what they choose for the numbers. But the difference between a negative income tax like that, which is boosting the bottom 40% of the population, is that like a UBI could boost 60%, 80% or something of the population. And then you could adjust the marginal tax rate to be much lower. So like a 50% marginal tax rate is still kind of high, I would say, but just for simplistic purposes, that's kind of what's usually said.